the recap of 2025 and the forecast for 2026. Let's start by wishing you all the best for this new year's, the good health, and of course, a lot of projects, a lot of opportunities, and a lot of business. And we're here to help you. Um, Today I'll be joined with Jack and Jean-Charles, so the same team as last year, I would say. For this, I would say rendezvous. We hope you had a good break during this end of the year and you managed to recover some energy to dive in, I would say, 2026 opportunities. Just one small remark before we jump in the webinar, and I'll leave the floor to Jack. In 2026, like in 2025, we'll keep all the AI and artificial intelligence assistants that are going to join the meeting. So if you want to have information from the meeting, you actually have to be at the meeting. So we'll keep it like this for everyone, so it's more convenient. And anyway, we'll send you the slide at the end of the meeting. So if you have any requests, you can ask them now, later, and have a private discussion. Jack, the floor is yours now.
Thank you, Jean. I'm joining you for the best wishes of this year. Health first, and the rest will follow. I'll start this webinar by telling you that the next one is already a plan. It will happen on March 17th, and we will look at Asia. There is, as you understood, quite a movement over there with a shift away from China. So we'll have a dedicated session on that. You will receive the invitation normally right after this webinar. As usual, and as Jean said, you will also receive the link to download the video for today's webinar, and you will have all the material of today's webinar. So no need to take screenshots and like this. You just can, would say, enjoy the show. Looking at the agenda of today, I mean, it's quite straightforward. We'll have a first look at 2025, and then we will have a look at 2026 and see what is ahead of us. We'll conclude with a specific chapter on energy transition. And as usual, if you have any question, feel free to ask them in the chat. We'll be happy to answer them at the end of the webinar. Jean-Charles is with us, so every hard question is more than welcome. We'll keep it from him.
Thank you.
Moving on, I think we can skip the next slide, Jean. I think everybody around the table knows us. No major change here, and I suggest we can already jump and dive in the trends and dynamics for 2025.
Yeah, thank you, Jack. And you're right, a lot of things have been happening in 2025. It was a big shake of energy again. And I think that the main point, but we already mentioned it during the previous webinars and all along the year during the workshop with you, that we're entering a new era of energy, clearly. And we wrote the little catchphrase from energy policies to political energy in a way to, I would say, show that we transition from one to another. Inside this and this catchphrase, which is a little bit simple, there is two ideas. The first one that we have been since COVID impacted a lot by energy policies, especially on energy transition, where we have seen a lot of public, I would say, support to turn around, I would say, from the energy and go in energy transition, which is not really happening without telling you everything from the presentation. And now we are more and more, since I would say 2 years, even more for some aspect of it, going into political energy, where I would say decisions taken for political reason or for security reason are impacting energy projects more and more. And we try to make a list of 2025 events that reshaped our industry. And of course, the first one was Trump election, completely shift the vision in US, and it was a big push in LNG. We can also mention the deal which has been signed from European Union to US for 250 billions of importation of energy from US to Europe every year. Also, the soft price war that is going on by OPEC countries, especially in Asia. And many other aspects, for example, the new policy of energy in China, which will push 60% of renewable in the usage of electricity for industry. etc., etc. Some changing also in Australia. So happening all over the planet, and always, I would say, political decisions which have really pushed in favor or counter, I would say, some energy project. And it's more and more, I would say, coming up as a really our normality to today. And we are starting 2026 quite strongly, I would say, with what is happening in Venezuela and Iran, which, of course, depending, I would say, the fate of different government there will shape quite a lot the oil landscape, at least for 2026. Not really so much 2026, but of course, for the vision of energy in the future as well. And one point that is really, I think, important that happened in 2025 that I would say there were a common understanding in the Western countries that we need to face the reality of fossil energy, meaning that we're going to remain using a lot of fossil energy for quite a time. And for me, really, the peak of this, because we have been advocating for this vision of energy for quite a long while, to be honest. And I mean, we're trying to, I would say, speak against different lobby of that. And even the IEA, which was maybe the strongest lobby in favor of, I would say, peak oil, has now announced finally in November that most likely there will be no peak oil before 2050. And for US, I think with Trump election, it was quite automatic to shift from one another. But to see Europe and making this kind of shift is quite important because it showed that first there's still a lot of activities to be done in oil and gas, and also it showed that with I would say 4 years of energy transition, now I would say the vision of energy is evolving a little bit, and we are seeing more and more. I would say the future of energy as a mix of oil and gas and many other energy, including renewables. Another thing which is important here is that for all the Western countries, they are opening the door again for oil and gas investment, opening the door to banks, to companies, etc., to jump on those trends as well. So it's quite important to see this shift happening, especially in Europe. Of course, one of the big, I would say, impacts of, I would say, this year was Trump election through the tariff, but also through his, I would say, different policies. We have seen a lot of impact on projects. Split it over the US project, where, of course, ending all the public support and public financing of energy transition quite a lot stopped the project there, and we have seen quite a dramatic drop. You will see in the figures of energy transition investment in US. Also, we start to see in action the drill, baby drill for oil and gas project. And you will see between the what I present and Jack that the momentum in US for especially energy is getting really crazy, to be honest, in terms of figures and size. Also, the tariff, to be honest, we were expecting little impact, and it has almost no impact today on projects. It's raised the price, but it doesn't really slow down the project. And what is more interesting is, of course, the impact of Trump to the export, I would say, because, of course, while he stepped out of the Paris Climate Agreement, in the meantime, he also allowed all the US banks to reinvest in a project in oil and gas. And as the example of Mozambique by Total Energy, I would say most of the financing is done by US banks, and this has been allowed by Trump election. So you see things that are happening in US have, of course, an impact globally, as you know, but sometimes in not even direct ways, but in indirect ways to finance and expose those projects. The last point, which we think is still important to mention, because we see the energy demand still rising and even accelerating to the point that any serious forecast today is predicting that energy demand will grow by 25% in the next 25 years. Okay, so it's quite handy to remember 25% growth in the next 25 years. Mostly in developing countries, to be honest, of course, China, India, etc., and many others countries in Asia, and that's why we do the next webinar on it. But also, we see a growth today happening in developed countries, which is quite new, due to the usage of artificial intelligence and to the growing demand of electricity. And what is quite interesting in that, and that's the graph you have on the right, you see that the colors pink and yellow represent the weight of renewable energy inside the energy mix. And you can imagine, I mean, the size of this renewable energy compared to the fossil energy, there's quite a gap, but also the curve and acceleration of, I would say, energy need still accelerate faster than development of renewable energy, meaning that today we are still not into the energy transition and not before 2030 and most likely not before 2035 today, that renewable will start to be able to replace other type of energy. It's a pure energy addition. Okay, of course, what we see as an energy demand, we see it a little bit later into, I would say, the project pipeline and into the investment of project as we will present. Jack?
You with the mic on, it's better. Let's have a first look at the project in 2025. Let's have a global picture of the capex being awarded. The first information that 2025 is another record year versus it's even higher than 2024. It's a slight lead, but it's still a bit better. What is interesting is that overall, let's say since we are out of COVID, it has been increasing year on year. Now we are, as we expected already last year, we are hitting a glass ceiling. Not because there are not enough projects, just because there is no capacity to do more. It's impossible. There is a clear bottleneck within the engineering companies, and it's difficult to put more projects live. And that will probably maintain over the last years because last time we checked, it takes 5 years to make an engineer. So that's the first information. Then if you look into the details, you have oil and gas that is quite steady year on year. The investments are quite steady to increase the production and maintain the current asset. Energy transition, as Jean explained, it's clearly an addition, and there is no transition yet, so it comes on top. If there is a transfer within energy transition, is actually not towards oil and gas, but petrochem, when you have some application within energy transition that are linked to petrochem, like alternative fuels or decarbonation of current petrochemical assets. But that's it. Now we are at a point where energy transition is quite massive. It's almost at the size of oil and gas, with a shift, and we'll come back later on the slide, with a shift going away from green hydrogen to directly end product. What is also interesting to see is to look at the details per region. And you can see that the first region leading the market for 2025 is Middle East, with more than 130 billion being awarded in Middle East. That's the purple part of the chart, followed by US in blue and Asia in orange. With a slight difference between the two, it's the size of the projects. They both awarded 80 billion worth of projects. But US did it with 40 projects, when Asia it was 80 projects. So that's the big difference. Follow then Europe and Africa for different reasons. But you will see when Jean will come to 2026 that the shift is a bit different for the next year. Obviously, every region has different needs. The global demand for energy is obviously pushing projects, but then you have political and security reasons that comes on top of that. If we go down a layer below with the details per application, keeping always a split per region. If you look at oil and gas first, you see that the market is being dominated by US, North America, mainly US in our case, and then followed by Middle East. And if you look at North America, you have them in oil and gas, but they just nowhere in petrochemical, in energy transition. They just left completely this application so far for 2025 and focused exclusively on oil and gas. If you look at petrochemical, without a surprise, half of the market is done in Asia, followed by Middle East. And here the reasons are quite different, as we already explained throughout the various workshops we had together. Petrochemical is need to increase and to grow the population and the market. So the demand is actually currently in Asia. boosted also by the fact that Middle East wants to protect this market, so they are also investing quite heavily in petrochemicals asset in Asia and locally to create value for their own population and to create value over their, let's say, raw material that they have. Looking at energy transition, as a surprise, it's not Europe or US that is leading the market for 2025, but it's Middle East. The energy transition application within Middle East and within Europe are completely different, as you can imagine. If you look at Middle East, you have mainly solar, power generation, and water applications, water desalination applications. That's the main, I would say, application that you have in Middle East. When in Europe, it's more linked to, again, power gen also, but to e-fuel, sustainable aviation fuel, and these kinds of applications. So the needs are completely different from a region to another within energy transition. Okay. If we look at this last slide before having the outlook for the next year, for 2026, here we look at the profile operator. So there's not a revolution if we compare to 2024. Most of the projects are being done by national oil companies. They do 56% of the business, followed by independents, and then a small part is being done by international oil companies. Here you don't have the parts where IOCs are in JVs with NOCs, obviously, but just to give the first picture for the global operator, knowing that each type of operator have different needs. Even if IOCs are doing only few projects, you see the size of the project they do. Only with 20 projects, they almost achieve 50 billion. So the complexity and the capex exposure is absolutely not comparable to the rest, especially independents that are tending to run smaller and numerous projects, and they run it also faster than the rest of the operators.
Yeah.
I suggest we'll have a look to 2026. Let's see what's the forecast is like.
Yeah, thank you very much, Jack, for this recap of 2025. And I hope you kept some figures in mind, but nevertheless, we will enlighten a little bit the shift from 2025 to 2026. And you will have the slide also if you want to check on it later. But what is quite clear that there is still an effect of long-term growth demand for energy, and it's still driving project clearly. That's why you see, if you see on the chart, that the forecast for 2026 is still way higher than 2025. Of course, among these, you see that the two main categories is oil and gas in dark and energy transition, which are still growing massively. To be honest, and to I would say a little bit decrease that. First, there is a huge jump from US following I would say a push from Trump and I would say all the independent companies. Also, there is a push from India and other ASEAN countries, especially Indonesia and Malaysia, which are starting to grow a little bit at the same pace that China was doing few decades ago. So even if, for example, China and many other segments will go down, it's still compensating and still have a high expectation in terms of forecast. The only problem behind is that the forecast is too high, and a little bit like Jack's started to announce during his part, is that there is a limitation. There is this glass ceiling, and the glass ceiling is quite clear. It's the supply chain, first engineering companies, but also all the long lead item. I mean, we have in our, I would say, network a lot of projects that struggle to find compressors, to find pumps, to find electrical cables, transformers, etc. And of course, it's starting to pile up the project. And we see that quite well because, for example, here in smaller, I tried to put the same chart, but with only projects which have been awarded. Meaning it's no more forecast. And you see highest rack in 2025, but you see already how high 2026 is. And 2026 is pretty high, given that we are just halfway through January. And of course, it's a lot of projects which have already been awarded, sorry. And to the point that already starting today, we know that 300 billions have already been awarded for execution in 2026. Meaning that we're starting to arrive in a period where there will be more capex, and it has been more capex awarded than executed. And 2026 most likely would be in a situation where we see more capex being awarded, but less capex being executed. Okay, and that's starting to be right now, I would say, the situation where we have more and more projects which have been awarded in advance, which are of course consuming part of the bandwidth of all the supply chain, but I would say with many other projects coming on top of it, and I would say getting at the queue of the business. So be aware of that because it's going to be more and more situation, and we see the situation lasting till the end of the decade minimum. Now, if you look at the region and we look at the type of categories, first in 2025, you remember that energy transition was bigger for oil and gas. And it was the first time that energy transition was in capex bigger in the world than oil and gas. Well, I mean, energy transition stayed at the top for 1 year because in 2026 and the forecast for later is that oil and gas is going to reclaim its crown and is going to overpass the investment. One of the main reason behind is because US is back quite actively, and you see in terms of region, while Middle East was dominating last year, you see that US is going to dominate 2026 and most likely 2027 as well, with a huge push, especially in LNG project. While Middle East is slowing down. Why? For the main reason that they have been awarded for the last 5 years a lot of projects and a massive volume of projects. They know they need to focus a little bit more into the execution side of those projects more than I would say launching new project. Asia Pacific is slowing down a little bit because mostly of China, but overall it's quite a big chunk of the market. Africa is still growing. I mean, you remember maybe our webinar on African continent. Africa has gone from 5% of the market globally to 20% and is still remaining at the side, meaning that we see all the region being quite dynamic. Maybe we'll have the question, but right now we don't see anything from Iran or Venezuela, to be honest. It's a little bit too early to announce or to get any announcement of project, of course. But be sure that we will monitor the situation if we start to see opening the situation and some opportunities as well. If we make the same split as Jack did for oil and gas, petrochem, and energy transition, of course, in oil and gas, US is going to dominate vastly the business, driven by giant LNG projects. Why? Because with Trump election, of course, all the oil and gas in the region of US have understood that they have a window of opportunity to launch whatever oil and gas project they can for the next 3-4 years. So of course, everybody is rushing to do those projects because with next president, they are not sure they will be able to do those projects. So that's why we see such a boom and so fast in the market. And you see that right behind US is Africa. Africa is benefiting from, I would say, a new development now. Some countries have an opportunity to move fast, like Mozambique, Namibia, etc. So it's raising quite well the oil and gas prospect in the region. If we look at petrochem, I would say it's a little bit the same graph as we have seen last year. Okay, so still the same, I would say, long-term drivers. Population need are driving an investment in Asia Pacific, and Middle East are investing in petrochem, of course, to, I would say, monetize more their oil and gas resources. For energy transition, it's a big shift as well. While in 2026, Middle East was super strong, in 2026 and later, Europe is reclaiming, I would say, the first position, mostly due to, I would say, project around e-fuel, biofuel, whatever fuel you can invent, a lot of variation also of hydrogen and carbon capture. But Jack will explain those parts in more detail. What is quite important is to see that US is a little bit slowing down, and those are also a factor of Trump. And Europe is really getting more momentum, especially on the engineering side of the energy transition. One point which is quite interesting and quite uncanny as well. We made the same ranking but with different parameters, where we try to look at the future, the number of projects per plant of type. And we made two ranking, one by number of projects, and that the ranking here you see on the left. And you see that the biggest number of projects that we have type of plant is sustainable aviation fuel in blue, followed by power generation of gas, followed by green hydrogen, then FPSOs, windmill, green ammonia, LNG train, this little part here, then carbon capture, offshore platform, and then some oil and gas. And you see it's vastly, I would say, dominated by energy transition project. But if you do the same ranking on the right, but in CapEx, here everything is changing because you see that this big chunk here is LNG train. And despite the fact that they represent, I would say, around 10% of the project, they represent about one third of the capex that will be invested in 2026 and 2027. So when we say there is a kind of a tsunami of LNG project coming up, especially in US, it's actually the case. I mean, we're talking about billions and billions and billions in dozens of billions. So even though there is a number of projects in energy transition, while you add up the capex, LNG is dominating, followed then by windmill, FPSOs, FLNG, refineries, etc., etc. So you see that the dynamic of those markets, the size of those projects as well are quite different, but there is room for everybody to play and get advantage, I would say, of those market conditions. Last point, before I give the floor to Jack again, is about the players, because of course, on the last few years, NOCs were dominating always with around 50-55% of the market. And in the future, they are, I would say, losing a little bit a chunk of the market for two reasons. Not because rigs are slowing down, because to be honest, they are quite maintaining their effort in investment, but for the main reason that the IOCs are restarting, the majors are starting again to reinvest in oil and gas, at the example of BP, of Shell, but others as well. But more importantly, because the independent and mostly the US independent companies are reinvesting like crazy in LNG due to Trump election. And of course, when we see investment the size of 10 billion, sometimes several times tens of billion. Of course, it's a lot of money that is put on the table, and that's why the independent have grown their market share quite massively in the future, and normally should remain like this for the next 3-4 years, according to our estimation, which is of course quite a game changer for the market. Jack, I leave you to detail a little bit the energy transition for the last part.
Thank you, Jean. Let's have a focus on an energy transition because it's quite a movemented, let's say, a market for those who were in Hamburg end of last year. I think some of you spoke more about LNG than green hydrogen. But let's look at this graph. You already saw it before. It's not our invention. It's the traditional market curve. It applies here to green hydrogen or whatever, but it can be applied to any new market. We just, let's say, divide it in three tranches and then put some dates. The first part was the gold rush that we all experienced when were out of the COVID until mid-2024, let's say, where basically you just had to raise the hand saying green hydrogen to have public money. This gold rush period is behind us now for around a year and a half. We are in the maturity phase. We are going back to reality. Now projects need to be to have a market, needs to be also financially profitable because it doesn't make sense anyway. It doesn't mean when you see the curve like this going down, doesn't mean that the investment are going down. The market is still increasing in terms of investment. What is being streamlined is the actors. A lot of startups and spin-offs saw the light, and a lot of them will disappear. Not all of them, but most of them will disappear. That's right. Some, I would say, eccentric application disappeared. One of the examples that we had was hydrogen bicycle. Well, it's not a surprise that it's disappearing. I believe it's easier to charge the battery of your bicycle next to your coffee machine rather than going to refuel it with a green hydrogen. Doesn't make any sense. So all these crazy applications, they are disappearing, and you will see more in the details. Anyway, things that are linked to mobility are fading away, if I could say this way. Usually, when the gold rush lasted 4 years, we expect the maturity phase to also last for 4 years. So we should be out of it in 2028, and here we will have the market that will be increased to reaching a point where the market will be sustainable by itself. Okay. The next slide, we looked at the certain application and we made a ranking between what is being announced and what went to FID. Keeping in mind that already in the database, we already made some pre-qualification on the applications. Here we took the ranking on, let's say, the worst case scenario on the top. You will have the chart in the details. I'm not going to read through all of them. You see that the first one and the worst case scenario is the hydrogen gas pipeline. Again, everything that was linked to having green hydrogen being traded like we trade diesel is going to disappear. So obviously, all this network is going to the bin. The only projects in the light are actually projects labeled green hydrogen, but the only thing that they will see is LNG, okay, or gas. That's the only projects in the light. And when you go down to the list, if you are getting closer to the end product, the conversion rate is increasing. But interestingly, some application, even if the conversion rate is not, let's say, fabulous, if we look, for example, at ammonia green within the chart, it's only 30% of the projects moving from announced to FID. At the end of the day, at FID, it's still 36 billion of projects seeing the light. So it's not nothing. The market, it's not disappearing. It's just readjusting. But we will see that more in details, starting with green hydrogen. The chart on the left are not ours for once. They are from IAA, but they are saying finally the same story that we have been telling you for some time. Green hydrogen as a mobility is disappearing. Okay, the first usage of green hydrogen is to decarbonate industry. That's the first usage. Basically, you produce green hydrogen and you burn it on the spot. That's the main usage. Second usage is to create a synthetic fuel, sustainable aviation fuel, e-fuel, all the fuels that you want. So currently, that's the two applications, and that's probably what will remain of the application of green hydrogen. So far for the, let's say, hydrogen-based fuels, you have several verticals. So the one that is actually going quite strongly, and we saw them in terms of number of projects, is the SAF, the sustainable aviation fuel. Starting this year, we should have also a similar application for marine application. Why it's coming after? It's a simple reason. For this market to exist, you need to have a legal framework, and the legal framework for marine is coming after the one that we have for aeronautical. So that's why it comes on the second wave. And also what is really interesting is motorsport. Obviously, we are not talking about tens of millions of tons, naturally. But it's quite interesting to have this application because usually it's the laboratory of everyday car. For those who are in Europe, we know that during these holidays, they finally accepted to have internal combustion engine after 2035, if I'm correct. Under the condition, they will use alternative fuel. Okay, so it's already starting with cars or motorbikes, depending on which sport you want to follow. Usually, it's start with motorsport before coming to everybody's cars and motors. And the last slide on the left, normally on the bars, you should see under green electrolysis a green bar, which is actually the production capacity operational for green hydrogen. If you can't see it on your screen, it's normal. It's almost not existing. Everything that is above, it's depending on the volume, somewhere between probably will happen to mostly will not happen, somewhere in between. So the two pillars for development for green hydrogen clearly are heavy industry that are hard to abate, and the e-fuels for the mobility. Okay. Just one word on CCUS project. Under CCUS, you have two letters, the U and the S. The S have quite some difficulties to materialize. We already explained that in the past. There is a framework behind that is really complex in terms of financial impact that is really hard to have for an industry, for, let's say, a private company. The only storage program that are seeing the lights are some flagship projects like Northern Lights in Norway, and another one in Saudi Arabia, which I forgot the name, but every time it's the same scenario. You have the state behind that is going to take all the risk financially if something wrong is happening. So that will remain even if the legal framework moved a bit recently. Not sure that it's easier to make, but the storage will still have some difficulties. And when you have difficulties for storage, so the utilization is actually benefiting from that. And that's what more and more we see. It's the shift where you have more and more alternative fuels being produced. Just a word on CCUS. Currently, it's happening on two places, Europe and US. Currently, US are more leading in terms of execution of the projects, but that's the two places on Earth where it's currently happening. Last slide on energy transition. As I said, it's not because we are now entering, let's say, a facing reality period where you have a lot of factors being disappearing, being streamlined. It doesn't mean that the market is actually going down also. It's actually quite the opposite. You still have a difference between the forecast and the actual figures, where the forecast is a bit exponential and the reality is more linear. Still, in 2025, it's a new record year, and we achieved nearly $150 billion of projects being awarded. So it's not nothing. It's the size of oil and gas again. And again, if you see at what is already being awarded and already in the pipe for 2026, it's already 120 million. So the market, it's not disappearing. There are some shift internally in terms of application, clearly. As said again, green hydrogen per se is going to disappear slowly or to be a minority. And the synthetic fuel is going to take the lead. Also in energy transition, you have all the power generation projects that are here counted, that are also being boosted by the needs for AI, clearly. So this market is also still growing. All the decarbonation part, that the point that does not change is the usage. It works at, let's say, bricks. So if you want to decarbonate your plant, you decide, or you have several bricks that you can use, a brick of electrification, a brick of hydrogen, a brick of carbon capture, a brick of whatever, and then you can combine them to reduce the carbon footprint up to the level that you target for your asset. That remains. So it means that also this decarbonation process is more and more a process with like petrochemical with the licenses. Okay. I think we can now jump to the conclusion. Jean, I'll let you summarize the most important point and what we forecast for 2026. If you have questions, don't hesitate to shoot them in the chat. We will answer them once Jean is over with the conclusion.
Yeah, thank you, Jack. And it's a long conclusion because a lot of things have happened in 2025, and most likely a lot of things will happen also in 2026. But the main point is that 2025 managed to have beat the record of capex awarded from 2024. Not sure if it will remain like this because there is, to be honest, little to absolutely no room for additional growth in terms of capacity of award. And we know that all the engineering and all the key suppliers are already taken in full almost for the entire year of 2026. So we have the situation today that a lot of projects are already awarded for 2026 and for 2027, and the project that will be awarded will be on top of that, but it's not a lot of them. So we should end up more or less at the same level of capex being awarded. Inside this, I would say high level, I would say analysis. What is really important that oil and gas is restarting its growth in projects. We still have a lot of political turmoils, and 2026 is starting really strong with that, and it's honestly redesigning the energy map, but also redesigning the investment in projects. The Trump factor has been fueling a lot of growth in oil and gas in US, especially in LNG, and we are going to see a wave if not, I would say most likely a tsunami of energy projects based from US. But then, of course, those projects will have their counterparts, especially in Europe, to welcome and to, I would say, consume this energy. So it's starting in US, but it will go abroad later on. Asia Pacific is still continuing to concentrate right now on downstream. We'll check that in 2 months for our next webinar. At the opposite, Europe will dominate the energy transition. So you see each one is having its own category. Also, partly because US left the race, I would say, because there is not so much public financing anymore. So of course, that's why Europe is taking really the leadership there. And Middle East is still, I would say, super active because they have a giant backlog of projects that have been awarded in the last 2 years that they need to execute, which is, of course, consuming most of their capacities, financial and I would say human resources as well. And the main point right now, as we see that the leadership has been passed to the engineering companies and to the main actors of the supply chain, to the point where we see the final investment decisions, the FID, really being taken depending on the engineering capacities and availability that are on the market, which is a little bit upside down compared to a few years ago where it was I would say the engineering companies fighting to get contracts. So it's a big shift. It means that it's really down to the supply chain now to drive the business, and that's why we also have seen the price of EPC contract going up in the last I would say 12 months, and most likely that would continue like this. But it's a new situation.